Hi, everyone. Welcome to our Relearn podcast. We are so excited to talk about money today and the perception and the emotions and the things and that we feel about money. So today I want to introduce my co-host, Kelly. My name is Mega Jewel. Kelly, let's kick things off.
Awesome. Thanks so much, Mega. And thanks everyone for tuning in. For the theme of this episode is relearning our relationship with money. And I feel like I'm constantly learning about good habits about money, maybe bad habits about money that I've had. So I'm very, very curious about this topic. And we're really excited to bring an expert in this field. His name is Chris Hagan, and he is a partner at Advisor Investments with us today to share his knowledge and how we can have a healthier relationship with money, all things finance. Is that even a thing? Does it exist?
For sure.
What is it like? And try not to let it define us. I think that's really important too, right? And I know based on some of the research I've been looking at, like a lot of people stress over money. So how can we reduce that stress? Because we already have enough stressors in our everyday life. So those are the things we're going to be talking about. Without further ado, I'm going to kick it off to Chris. Chris, if you don't mind quickly introducing yourself and your role, that would be great.
Sure. Thanks, Kelly, and thanks, Mega. So yeah, my name's Chris Hagan. I'm a partner with a company called Advisor Investments, not super original, but we've been around for about 30 years. We're a registered investment advisory firm. So we have a fiduciary responsibility to basically invest our clients appropriately. So that's fun in terms of kind of making sure that we're taking care of each one of our clients in every which way that makes sense for them. We do have clients all around the country, some internationally too. We do things like investment management and financial planning, tax prep, as well as provide estate planning guidance. Go ahead, Mega.
I think that's the point of my conversation here is I grew up in a very, immigrant. We came from Indonesia. Mm-hmm. Money was very different in Indonesia here. And then as we were, starting from scratch, it was very much it was hard because you're talking about all these things that my family would not know a single thing about.
Yeah.
Like, where do we even start with like what it is that the value that you bring to your clients?
Yeah, I think it's a great question. I mean, my story is not that different, right? I mean, mine is just the Irish end of things, but my parents never had any money invested in stocks or bonds, but my father was a firefighter who invested in real estate, right? And he and his firefighter buddies were the ones that would fix up multiple properties and work on them together. And that is a great way to invest. Mm-hmm. And I think that that's how a lot of immigrant stories have started with success, right? And also probably being not big spenders, right? Those two combinations of things, which is getting some equity in something, getting a foot in the door, and then understanding the economics of not spending more than you've got.
And I think based on my observation in my community, I think there are three types of spenders too, right? Mm-hmm. You mentioned like maybe from immigrant background and not having a lot of money growing up that sometimes we're hesitant to spend, even if maybe we are at a point where we can, but like we always feel like there's the need of not having enough. Then I've seen individuals where it's almost to compensate. We didn't have a lot. And now that I do, I almost overspend. So like, that's why I want to get into this whole conversation about what is a healthy relationship with money. So maybe we just kind of dive into that and get your thoughts on like, does that exist?
Sure.
What does that look like?
Yeah, and I think that's a really interesting question. What I've gotten to see firsthand is that sometimes when we've seen really successful people, especially here, I'm in Boston, but a lot of really successful people that are now at the level of CEO, they've said to themselves, my kids will never have to go through what I went through again. And sometimes that ends up being a misstep to some degree, because there is a need for some degree to have a bit of skin in the game and a bit of a struggle. So I've seen that firsthand. But in terms of like your question about healthy versus unhealthy habits, I think it's a really good one because, I've been doing this now for a while, and I definitely think that I've been able to see firsthand healthy habits. Yeah. And I know that your audience tends to be on the younger side. So when we do financial planning, we're super focused on those healthy habits as opposed to whether or not you're going to make reach your financial goals. It's much more on things like healthy habits are like automating, right? Setting up automated savings or investment plans. It's an easy way to do what we call dollar cost average, or even to create this thing called artificial scarcity, which is kind of like getting used to living on less,
Oh my gosh, yes.
Right. That's kind of what
I'm doing that right now. I'm doing that right now.
You are,
So
yeah.
It's a really interesting like concept to make sure that you're like, this is what you got, and this is what you got to work with. That's it.
Totally, right. The other one is like, if you can, and I know this is so crazy because, and especially with the lives that we lead today, but ignoring some noise, like, if we follow Jim Cramer and he's telling us to trade this or trade that, it's like, you know what, from my standpoint, we're investors. We don't want to look at day-to-day trends. We want to look at longer term. What is our comfort with risk? Getting an early financial plan out of the way is huge, because a lot of, I think, and we've talked a little bit about this, but understanding the language of money is so huge. And I think that a lot of what was done in the past was designed to really confuse investors. So working with a financial planner, an investment advisor at an early age to just kind of like decipher what the language is huge, right? I think that's really important. And then also, as investors and as human beings, we have this thing called recency bias. This is where you tend to favor like those recent events that just took place over the historic ones. And this can lead investors to believe that, what's happening today and what's happening lately is going to continue to happen. And that's not really reality. So like a lot of what I do is kind of having investors take a step back and say, gosh, what's been going on lately is not what's going to happen forever. So I think those are some kind of like, I hate to say it, but unhealthy things. Does that make sense?
Yes,
Well,
and I have two follow-up questions,
Yes.
if I may. I would say automate. We have listeners who probably have a wide range. Some probably have a lot of expertise in this, and some are just starting, right?
Yeah.
So when you say automate, drill into that. What does that mean? What are some tools that can be helpful?
Sure. So I'm sorry, keep going. You go.
Oh, and my second question is, why is the language of money, why is it so hard?
Yeah.
So I love to understand little historic facts, if you have any, and I know Megan has some questions too.
Sure. So automating, I think, so easy ones to start off with, 401k, right? So having some money come out of your your paycheck automatically before it actually hits your bank. That's number one. When you get a little farther along in your career, maybe actually having your direct deposit going in two different ways. And I'm older than you guys. So what I've been able to do after a number of years is having a portion max out my 401k, and then another portion actually go to my after-tax investments, and then the balance go to my, to my bill pay. So actually doing two different types of kind of direct deposits, and if you can get to that point where you don't have any credit card debt, but at the same point, you're those are the things that and then by the time it gets to your bill pay, that's what I got to work with, right? So those types of things are really, really healthy. As for your question on why it was designed, or at least in my feeling, why I feel like it was a language was kind of hard for investors to understand. Well, gosh, think about the, A shares and C shares and these all different types of mutual funds or 12B1 fees. All these things were really designed to dupe the investor. I do feel like Fidelity and places like Schwab have done a good job to really make investments transparent. And I do think that even things like exchange traded funds, where there's really next to no expense ratio and next to no commission, and also registered investment advisory firms that are on the same side of the table as their clients, all those things really are making the environment a lot cleaner and a lot better and a lot less like, I want to steal from you. So I think that in my job as a planner and as an investment advisor, I'm super comfortable within the first meeting telling people how we make our money, and really it's a flat fee, and that is it. So that's a good thing for our industry.
Well, I'm glad it's progressing and becoming more transparent and making it less difficult for people.
Yeah.
Because yeah, that's not so great to hear that it was designed to be difficult.
Right.
I think
Well,
Mega has a follow-up.
I want to go back to your recency bias and taking a look at the pandemic. It was like an, oh my God moment initially, right? Let's conserve, let's conserve. It was really scary, daunting. We didn't know how long it was going to be. And then it got to the point where it boomed for a good chunk of people,
Mhm.
where you had an enormous amount of cash coming in. And I saw different types of people that Kelly mentioned, kind of just go out and spend.
Yeah.
And, you talked about those healthy habits. And what would you recommend people to go, what is now might not necessarily be long lasting. What is positive might not necessarily be the boom for a really long, like for a continuous persistent amount of time. And vice versa. If it's, negative and it's going downhill, don't freak out because
Yeah.
it's going to be temporary. It's a matter of time.
Yeah.
What's the emotional psychology or mindset that we really have to set ourselves to at least get to that like healthy habits?
Sure. I think there's a handful of things that I talk to clients about regularly. Number one would be turn off CNBC, ignore the daily news cycle if you can. Work on a budget that works for you and your family. The daily Starbucks is wonderful, but if you got rid of that, could you add another percentage point to your 401k? And I know that sounds boring, and I know that sounds not super exciting, but those are the things that, like, I don't have a car payment, but I do contribute a good amount each month to my daughter's 529s, and I'm proud to do that without having to have a shiny new car. But I've got a Jeep that fits my dog and kids in the back, right? So those are the things that, like, over time you can work on. Credit card debt, get rid of it. Before you get into saving anything, make sure that your foundation is secure. There are going to be tough years to save. And you talked about anxiety, and I'm glad that you brought that up, Mega, because I see it especially with my younger clients who are new parents, where they're saying, like, gosh, Chris, I'm not saving a darn thing. And I'm like, guess what? You know what? You probably shouldn't be, because right now I know that you're putting a ton of money into, childcare, and those are expensive years. So having someone to talk to, through those things helps. Having an emergency savings account is very, very smart if you can. Whether you're with Schwab or Fidelity, the good news is with a money market, I looked today, Fidelity Cash Reserves is now at like 3.99%. The Federal Reserve raising rates has not been great for your mortgage rates, but has been very good for at least getting short-term debt and those types of things, getting a much better rate. So those are a couple things, but I think that, those are the kind of, like, for the younger folks, if you're getting towards like bigger issues, Medicare, Social Security, those types of things, or trusts, and, like, trying to figure out the best ways to hand assets down to other generations, contact someone like me, because that gets a lot more complex.
Got it. Well, at least I like the good tips on simple things we could do, right? Like
Totally.
the Starbucks a day. That's simple. We can make our own coffee and put it towards our 401k, or other ways that we can automate it. So I definitely like that. Any other simple tips that are part of healthy habits before we kind of talk about, I think we've talked, speaking of recency bias, obviously we are in an economic downturn, and I think that can cause a lot of people a lot of stress, especially, sadly, those that have been affected by layoffs, right? So wondering if there are any tips there too. So I'd love to get into that.
Sure. I mean, I think we've talked recently to a lot of clients about whether or not they are offered a Roth 401k option. That is something to examine, and then whether or not it makes sense for you, depending upon your tax bracket. More and more, I think it's close to 50% of companies today in America now offer a Roth 401k option. And especially even if you're very new in your career, that is a really smart option, because basically what happens, and I think the whole industry has changed, but especially with Secure Act 2.0, we used to get into this frame of mind, which was like, put as much as you can forever in your, and ever into pre-taxed 401k, max it out for your entire career. What
Right.
I see is the other end, which is like clients get to be 72 or 73, and all of a sudden they have to do this thing called required minimum distribution, where they have to take out a part of that pre-taxed money. And guess what? If you have a really, really successful person, they have to take out $200,000, $250,000. All of a sudden they have this huge tax bill. So for me, if you're younger and you're not earning a lot, think about Roth 401k.
That's a good one.
Other ways to kind of think about Roth and reducing that lifelong pre-taxed money when you can.
That's a really good tip
Thanks.
for all of us starting with on this journey.
Yeah.
Mega, any questions there before I kind of move on to we talk about the economic downturn?
What I'm hearing from you is that there is one way to look at it from a short-term perspective, the coffees, the car, but shifting our perspective to how do you want your tomorrow to look like with yourself, with your family, with your pets or what have you? What really distinguishes value in your life? Because ask me now, I really want that car. But if you ask me probably next week after I sit on it, I'd rather have more financial security for my family versus anything else or something like that, you know, or buying a house, putting that money on a down payment to build that wealth. Am I on the right train of really shifting what you see now as a shiny object might be see something down the line that's a bigger, shinier object to achieve?
I think you're describing exactly what we all feel as human beings. I don't think that, like, a lot of what I do sometimes is that when I have people that are such staunch savers, Mega, for forever, like I just had a call a little while ago where I was like, spend some money, go on a trip, like go do some things, and then I have other people where it's like, oh my gosh, you know what? We might need to think about getting rid of that, that third country club membership. It's a balance, right? I mean, we need to find that balance. So it's like, should you go and do those great experiences? I think the pandemic has taught us, yes.
Yeah.
Do those great experiences.
Sure.
Do you need to have a Lamborghini? Maybe not. Maybe that can be maybe that can be an Acura that has 1 year of, worth of miles, and all of a sudden that money can go towards a 401k. I think it's more of that balance, but I don't, for each person, it's unique. And I think that what I try to do is work through the numbers with them to make sure that, yeah, take those trips. Absolutely. But do it in a way that makes sense. Does that make sense to you?
Yeah.
I think the rule here
It's
is
hard.
everyone's so different on their journey, right?
Totally.
And I think that's why having professionals like you can be like, nope, you're at this point where you can do X, Y, and Z things, or maybe not. Maybe this is a better way to automate or invest in another fund.
I want to add one thing, and we talked about this briefly. My background is very different than everybody's, and the way that I was deemed as whether I was successful or not was how much money I had at a job, or how much collectively, all the things that I wore and all of that was very important to, at least I think, or it was ingrained. And what I love about this conversation is that we can come to you as like the money doctor, essentially, to be able to prescribe something that works and is customized to myself and my family, because it's kind of like a no-brainer. Like, it helps you shift your perspective, helps you like create long-term plans, being able to build those healthy habits and automate and be the dictionary for folks who might not know what the hell a Roth 401 whatever 401k option is.
I think that makes a ton of sense. And I also think, Mega, that makes a ton of sense. But I think a lot of people want to know, and in our world today, there's no forum to be able to say, hey guys, we're all around the same age. What does our financial situation look like? And am I okay?
Well, and
like,
people don't even want to talk about it, right? It's so
Right, right, right.
taboo.
It's a taboo.
Yeah, exactly.
Yeah, so even like within my town, we've got, I mean, so what I usually can tell people is like, here's what I see, and here's what works, and here's where you are, and guess what? You're doing fine. But here's a couple of things that we can work on. I mean, it's essentially a financial planner is someone trying to poke holes in your situation. Say, here's where you may be a little bit vulnerable. And here's some things that maybe you haven't thought about where we can kind of make your situation a little bit better. Tonight I was talking to a corporate executive who hadn't really, I mean, she's worked forever and she's traded around like an all-star on a baseball team, but hasn't done a basic estate plan. I mean, so for me, I'm like, that's an easy, like, you know, and you know, so if you can have a conversation with a financial professional that's like, this is just what I do all day long. I can tell you where you're doing great, where you need a little work, and then where things we can work on together.
And what if people say can, you know, afford to have like an advisor like you? What are some good resources for them at least to kick it off? Like you talked about these great habits that we just talked about. Like where would they be able to find it? What are some resources you would give them?
I think you know, like this is a good place to start.
I just bought it.
Right, we talked to, so Morgan Housel has a book called The Psychology of Money that I like, that I
Awesome.
send out to a lot of clients. You know, chapter 3 is like, you know, never enough, right? And he just talks about the goofy things that people do with overspending. And I think it's important to think about. There's another one that I like that's called The Millionaire Next Door. I forget the author, so I apologize.
How about the intelligent investor?
Oh yeah, that's another great one. Totally.
Okay.
And I've given that to clients too. So those are great kind of starting points, which are like basic investment thoughts. Some of them go a little over the top, which is like, you know, refill your vodka bottle that you had before with some other cheaper one. You know, those, you don't need to get into that stuff. It doesn't have to be that crazy. But in terms of kind of like The Millionaire Next Door, the thing I like about that one is like, you're not the car that you drive, right? Or those types of things where you're really tied to like, you know, you shouldn't have to feel that way to be successful. And a lot of the people that I really work with that are successful, that do have really good financial plans, are probably not driving Lamborghinis. They're probably driving a Ford Taurus that maybe, or a Volvo that maybe they've had for 15 years.
I love that.
You know what I mean? But I think that's, I've gotten to see that firsthand, and their kids probably have really good 529 plans. You know, I mean, those types of things.
And that would reduce your stress, right? Like you're not stressed about paying for this expensive, you know, car bill.
There's nothing worse than when I get a call from a client that's like, I don't know how I'm going to pay my bills, right? That's awful because you're overextended. So if you can live below your means and have an emergency savings, that is where you want to be.
Yep, I completely agree. I know we only have a few minutes left, so I want to get to, I think we don't do our jobs for no reasons. I think there's always some kind of personal story there. Want to know what that personal story, if that makes you love your job. You've been doing this for a while now.
You know, gosh, yeah, I've been doing this now for a while. The team that I have, you know, I'm lucky enough to lead a team, and then to work with all different types of clients, and a lot of them are these wonderful immigrant stories, right? Those are really and then helping not only like them, but then maybe their parents and maybe their kids. I think I like to think that I'm an educator to some degree, and that's fun, where I can unpack the complex language of finance to say, well, this is what it means to you, or you know, your family, and this is why I'm going to be able to maximize the net to your heirs and reduce your taxes to your family, and I'll do it in a way that's going to be easy for you. That part, when they're like, that feels good. You know, like I think Mega talked on a few times tonight about like reducing stress. If I can do that, that's pretty cool.
Yes.
I like that, you know.
Sounds like you have a very meaningful job, and we're very thankful for your expertise. Mega, is there anything else that we haven't covered with Chris?
How can people get a hold of you? What's the next step? I know I'm going to be reaching out to you individually, but what can our listeners do to really connect with you or get those resources that you were talking about?
Sure. So you can email me. You guys can get my email address after this. I have a team that supports me. We can help you out in any which way that makes sense in terms of whether it's free, guidance or things like that, or just general conversation. We're always open to that. That's part of the fun of what we do.
Fabulous.
Amazing.
All right,
Thank you,
Chris.
Chris. We'll share your contact with our listeners. And thank you again for all the great advice. I know I will be taking some and seeing what I could do to have a healthier relationship with money. And Mega's already have it on her to-do list to contact you next. So that's really exciting.
Legit. Seriously. Thank you both. Appreciate
Thanks,
you.
guys. I
Thank
appreciate it.
you.
All right.
Talk to you soon.